Let's talk about it, all of it. Here on set with us to kick things off is Citigroup's Director of U.S. Equity Strategy, Drew Pettit. Drew, it's very good timing to have you on today.
They're all important days, right?
They are. I mean, listen, and I don't want to make too much. 1% down Friday, a little over 1% down today. Market's still up nicely on the year. Nobody's panicking. No markets in turmoil yet, Drew. I know you're disappointed in that. But what are you telling clients about the markets today and what's going on?
Look, it's a healthy reset. I think we do have to step back a little bit and remember stocks don't just go up and to the right without a pause. And sentiment, I've heard other people talk about, oh, sentiment's beaten up a little bit. No, it's coming off a really high level. So a reset there. Again, healthy expectations for growth, still up and to the right. So, take this opportunity.
Is today, again, we're talking about 2 days, so don't want to make too much of it. But if we had to ascribe a reason, is it markets were too hot? Markets were this? Is it the tariff ruled illegal headline? Is it something else? What do you think's going on?
I think it's a reaction to rates. So we can stretch this out a little bit. Yeah, tariffs, good for revenue, good for debt. Those coming off, you start seeing the 30-year moving higher, 10-year moving higher. Markets were priced for perfection, good growth, lower rates, all good for equity valuations. So it's just a bit of a pause. So I think, again, it's sentiment coming off of really high levels when everything was getting priced to perfection.
So, and again, this tariff ruling from the appeals court Friday, I was hosting Fast Money, was after the bell, hard to know what to make of it. Clearly, it will be appealed to the Supreme Court. We don't know which way they're going to go. I'm not asking you to make a legal ruling on where this goes, Drew. Don't worry. But if the Supreme Court agrees that tariffs are illegal, in other words, they're gone, there are no tariffs, will we see continued moves in, the bond market?
Probably, but what we might get, and here's the positive, is we'll get better earnings expectations. So here's the good and the bad. Bond market, rates higher, okay, bad for equity valuations, but tariffs going away is better for earnings expectations and margins. We think that wins out in the long run. So if it goes away, fundamental positive, market positive.
Yeah, you're talking about, let's say, pharmaceuticals, okay, as a group. And there's been tariffs on big pharma from Europe. China holds a lot of keys to some of the critical elements going to pharmas. Either way, pharmaceuticals, biotechs, they are impacted by tariffs. If that risk goes away, I would imagine that group could get a boost.
Yeah, I think it definitely is one area that's been in the crosshairs. But remember, those aren't necessarily IEEPA tariffs. That could be Section 232. So kind of more to come on which tariffs could stay and which ones can go. But not a lot of price into pharma. So any good news or alleviation of bad news could be good for the group.
Is there any, outside of tariffs, whatever, is there any group or groups right now that still look attractive relative to others or relative to the macro markets?
Yeah, it's funny. AI, always an important
Are you saying
topic.
AI?
I think so. I feel like we can't talk about markets without talking about AI.
Don't worry, we don't.
Oh, yeah. But the key there is that's a secular trend. But I think outside of AI, there are some really interesting value areas of the market. Some of the fintech names that fall into
Isn't that AI?
Value. Even outside of the AI names, more of the traditional finance names that are finally delivering more of their products and services via tech platforms.
The Affirms of the world?
I would even say something like a BlackRock, a Capital One.
Oh, you're going all the way private equity.
Look, you can finally start to see that creep into more and more portfolios, and there's a margin expansion opportunity there. Equifax, again, tied to the mortgage market, but finally getting more of the credit reports and all of that history being delivered electronically.
Yeah.
I think there's a lot of opportunity there in financials plus tech.